All right, team, I waited a few days and let the dust settle for the post-Fed rate cut announcement that happened last Wednesday. I kind of wanted to do a deep dive in understanding why anytime the Fed cuts rate, why that doesn't directly affect mortgage interest rates. And actually this week itself, right, immediately prior to the Fed rate announcement and definitely thereafter, we actually saw mortgage interest rates tick up again. Now, just relax. It's not as bad as it sounds when we say mortgage rates have ticked up. We're just wanting to make sure that you understand, again, first of all, what's actually happening with rates. Second of all, that the Fed rate decisions do not directly correlate to mortgage interest rates, okay? It's very important that when you're working with a mortgage expert, right, the reason that we reach out to our clients anytime there's different rate opportunities, we see rate drops, is because we're very forward looking in our industry, okay? And I tell all of our clients, all of our real estate partners, that mortgage interest rates will get worse and deteriorate significantly faster than they'll ever improve. Okay, so let's just talk a little bit about it. So the Fed decreases the short-term Fed funds rate by 25 basis points on Wednesday, and immediately thereafter we see mortgage interest rates tick up again. Why is that? It's not because of the Federal Reserve cutting interest rates, obviously, that's a good thing, but it's because of the press announcement and conference thereafter that Mr. Jerome Powell had. One of the sentences that he spoke in that actual press conference was that we cannot be absolutely certain that we're going to get an upcoming Fed rate cut in December. Now, this is a very wonky thing to say in a press conference, especially when things like this will move financial markets, when we already had a 90+% Fed rate cut, chances of a Fed rate cut in December priced in. Okay, so when things like that walk back some forward-looking guidance, that's when mortgage interest rates will deteriorate. Okay, so again, it's not the end of the world. It's just missed opportunity for some that could have locked their interest rates early last week or the beginning of the week prior to that, where now, of course, rates have ticked up at eighth of a point. And it's not necessarily, remember guys, when we're talking about rates ticking up, remember, you could pay points and whatever to get really whatever rate that it is that you wanted. On a conventional loan, could you have a 5% rate right now if you really truly wanted to, as long as you're not paying more than essentially 3% in discount point to acquire that rate? Absolutely. Is it smart? Heck no. And is it very much going to depend on the lender and mortgage partner that you're working with and what rates they offer? Absolutely. But all of this comes down to strategy. A little bit of it comes down to timing. And most importantly, it comes down to who you partner with mattering.